Good afternoon, everyone. I hope everybody's bellies are full and they've had something to eat. And we're ready for an interesting discussion on the topic of ESG, not MSG, and that's environmental social governance. And I've got a great panel here with me today. We've got Robert, Stasia, Travis, and Joseph. I'm John Harvey. I'm the founder of InsurTech Canada, and I'll be your moderator. Before we go into intros, I do want to thank everyone who is tuning in live. If you are part of the live session, we are going to take questions at the end. So please go down to the Q&A. You'll see it at the bottom of your screen. You can type in the questions as we go or hold on to them, and then we'll read them out to the panelists at the end. We'll do our best to get to all of the questions. And then for anybody who isn't able to join us live, this session is being recorded, so you can catch it on the replay. So let's jump into introductions. Joseph, you want to get us started?
Yeah, good afternoon, good morning for those on the West Coast like us. It's great to be with you. My name is Joseph Nakla. I'm the founder and CEO of a publicly traded company, a microcap called Tribe PropTech, and we're really focused on residential living management. We've built a suite of software and solutions for those people that live in residential communities, both in the what we call institutional rental communities as well as condo management communities. So we're an alternative to a traditional property management company using our technology.
Excellent. Robert, over to you.
All right. Name is Rob Young. I'm a research analyst with Canaccord Genuity. My day job is I follow public equities in the technology sector primarily. It's not limited to that. I talk to all sorts of different companies, not just public companies. If you're not familiar with the way that capital markets works, the research function publishes opinions on the valuation of public companies. And the big audience is institutional investors, although I wouldn't limit it to that. I've been doing this since before the recession in 2008. So I've been publishing research on companies for more than a decade. Before that, I was a consultant at IBM and then an engineer at Nortel. And then Canaccord is Canada's largest independent. It's an investment bank, and we have a large business in Canada, the United States, in the UK, and in Australia. And generally, we focus on emerging markets and technology. Emerging technology are new markets, not geographical market, but emerging technologies and new areas of investment. And I'll pass it along.
Thank you, Robert. Stasia, over to you.
All right. Hey, everyone. My name is Stasia Van Zetten, and I'm the Chief Strategy Officer and co-founder of Exact Technology. I'm a structural engineer and have spent about 10 years working in the construction industry. I first started working on the general contracting side, which led me to eventually starting my company, Exact, based on the many inefficiencies that I saw within the construction process. I'm a huge concrete nerd and sit on a bunch of committees and boards within the Concrete Codes and Standards Associations. Just quickly, at Exact, we're a hardware and software solution for monitoring different aspects of projects like concrete properties or ambient conditions during construction and sometimes after construction to make processes more efficient.
Excellent. And last but not least, Travis.
Okay, so we're all aware that we're on the hot seat now with Robert being the heavyweight analyst in the panel here as we're either going public or are public. So we better be on our game here. So Travis Allen, I'm the CEO at Eddy Solutions. I'm your very, very typical type AAA entrepreneur. Started my career in the late 90s. Had a company that grew to around 400 employees and then had an exit there in 2014. Very, very much an avid investor in capital markets, private equity, and that type of thing. I started on at Eddy Solutions about 4 years ago, initially as an investor and director, and then in the CEO seat for about 3 years or so. Our solution is essentially leak mitigation technology that we typically employ mainly in high-rise towers. The easy way to explain our thesis is we're targeting the number one cash outflow for insurance companies, constructors, and operating buildings. So very, very excited to be on the panel and and happy to be talking about all these discussions with the investing context or perspective in mind. So thank you all very much.
Good stuff, guys. This is quite the crew. So without further ado, let's jump into the topic at hand. So ESG, as we know, has become a focus for many companies. It seems to be cross-industry. It doesn't really matter, industry agnostic at this point. I'm wondering if each of you can, expound with limited words, maybe at a 50,000 foot level. I know that's hard for the type A's in the group here, but we'll try to keep it concise to start, and then we'll peel back the onion as we go. So, Joseph, why don't you start us off here on just your view of ESG?
Yeah, absolutely. I mean, ESG obviously means slightly different things to different people. The lens we look at it as a company, as a custodian of a management company that looks at assets where people live, meaning condo communities or large REIT or rental assets that we manage daily. The lens we look at is really specifically to consumption and the carbon footprint of these communities. So to make myself sound really, really smart for this, I actually went out and I did some research, and I actually floored my own self with my own argument as it pertains to the impact of densification around the globe. So as more and more of us kind of leave traditional single-family homes and live in these condensed communities, as we were experiencing, whether Vancouver or Toronto or anywhere else really globally, you'll see that the data really shows, this is as of 2017, so it can only have gone higher, but 28% of global carbon emission is actually coming from communities, from buildings, whether commercial or real estate. And then 11, and this is just the consumption of water and electricity, but in addition, and waste obviously, but there's an additional 11% associated with the construction material and renovations and all the kind of stuff that we do. So if you add them all together, that's 39% of the globe's carbon emission coming from structures. As a company that manages, we have about 100,000 people live in our communities, and while it's a modest number compared to the rest of the globe, it's still quite a bit of carbon that we want to be looking at. So that's kind of the lens we look at it, is how can we environmentally and socially impact these communities and give them a guidance that can actually be sustainable to improve their footprint.
It makes a lot of sense. Thanks for that, Joseph. It was a great way to start things out. Travis, what do you think from your perspective?
Yeah, so I think ESG, like from the perspective, we're in the midst of an IPO here ourselves. I think ESG from an investing perspective, it's an incredible theme today. It's a very, very interesting thematic story, garnering very high valuations. I think as we focus on it at Eddy, we're looking at it from the perspective of sound business strategy, sound economics for our own business, not at the expense of our profitability or shareholders. Mm-hmm. So I think for us, outside of the solutions and the things that Joseph layered in there, I think when you're thinking about investment, trying to gain investment from outside parties, and you're competing for capital and also all sorts of interests, we really think about it on the basis of how to be a profitable company, driving shareholder value, not at the expense of our solution. So at Eddy, we have it's interesting for us because our solution really targets those components, and we kind of have a pretty natural fit with what we do. So it's a great theme and really interesting, but I think we think about it on the basis of real business economics and interest to driving shareholder value, just from a capital markets kind of overview.
Yeah, certainly that's important. You don't want to lose sight of that. Stacia, what say you?
Yeah, so I guess I'm always looking at it from the construction boots on the ground perspective. And what are two words that we always hear when we're on site? Schedule and budget. Those are the key drivers for construction, and they still are. For years, no one's really cared about anything other than making sure your project is done on time and profitable. We are starting to see that change. Owners, they're actively seeking contractors and suppliers who have ESG strategies and policies, whose teams are diverse, we're seeing Post-its up on contractors' walls for inclusivity, making sure that the products being used are renewable or ethically or locally sourced. And as Joseph mentioned, obviously contributing to a building that reduces carbon emissions. And I guess that's my main focus and our main focus as a company. And the easiest one to understand is that construction and development activities have a clear impact on the environment. So it really puts a focus on the environmental pillar of ESG.
You said something really interesting there, Stacia. I want to just pick up on that for a second. You talked about the focus, the emphasis on budget and time, the traditional thinking, those traditional KPIs that everybody goes to. I wonder, and maybe we won't get to it today, but it's maybe something thought-provoking we can all put some thought into. Everyone's been through the RFP process. You've been on one side of it or the other. Does ESG really make it into the scoring and the weighting? I think that's put maybe a test for all industries to put their money where their mouth is. Travis talked about shareholder value. Do investors really care? And I think Robert's going to expound on that a little bit as well. But then again, when we're pricing jobs and we're bidding on jobs, does ESG really come into play, or are we all just kind of talking about it in platitudes, right? So I think those are challenges to just put out there. So I'm glad you opened that up, Stacia. Thank you very much. Robert, over to you. You've got a unique perspective from an analyst point of view. I don't want to label you, but I think it's probably quite a bit different from everything else that we've seen, and you see the full gamut. So I'm really interested to hear what you think.
Sure. ESG is definitely something that's been growing in importance like through my career. I'd say it's accelerating more recently. I mean, within ESG, you've got, environmental, social, and governance. Governance has always been a concern to investors. Well-governed companies are generally good investments. It started out, I think, as a concern around fat tail or long tail risk, where you're using ESG as a way to sort of look at companies over a longer term investment horizon, where you're trying to remove companies that might be more at risk of a black swan event or some rare management issue or something like that. If you were looking at the governance structure and you're very careful around some of these ESG factors, then it would remove some of that. I'd say social and environmental are definitely taking on more importance now, and you're seeing some of the largest investors in the world that are starting to put that into their investment process. I would say that the bulk of the institutional clients that I talk to, it's one factor amongst many. In general, I mean, I'm certain it's like other areas. Investment managers are, they are ranked and scored on the basis of their ability to provide returns on capital. And so ESG, like I said, I would say it's more related to longer term risk than to near term performance of a company. That's changing very quickly. And I don't know, maybe we can dig into that more later, but I'll leave it at that.
It's really
that's a really good perspective, Robert. And just to kind of expand on that a little bit, because we are hearing that it is a hot topic in the investor world. But is that just a good headline, or is it first principles kind of thinking, like the first three things that an investor would look at? Is the prototypical investor really looking at ESG strategy, would you say, especially with a company that's coming out with their first public offering?
Yeah, there are definitely investment managers who use ESG as a way to segment the population of companies. If there are thousands of investments that a money manager can look at when they're choosing companies to invest in, and they may split those into groups, and they'll say these are ESG companies and these are not, and I'm going to invest entirely within that ESG group. And so if you're a company that's outside of that group, a lot of the time, I think something that private companies don't understand about the public markets is that you're trying to attract interest from as many investors as possible to, incite a higher amount of demand for your stock. And so if you're a company that ranks low on ESG, then you're potentially excluding some investors who might be competing for your stock and, would otherwise, bid that stock to a higher level. I think that at this stage, I would say that it is not easy for an investor to force rank companies on ESG, because it's very difficult to understand whether one company or another is better on ESG or not. And so it's very simple not simple, I wouldn't use that word, but it is a lot easier to rank companies on the basis of financial performance, obviously, than on ESG factors.
But you know what, you said something there about segmenting, which might, like, before we even get to the financial factors and looking at profit and loss, et cetera, depending on the investor appetite, they might not even look at a certain sector because, and I heard another analyst refer to it as sin sectors, like alcohol or tobacco, that might, be taboo now.
Right.
Okay, like, I'm not even going to look at their KPIs. I'm not even going to look at their financials because it's a sector that I'm not attracted to as an investor. So that's interesting. The whole segmenting piece, I could see how that could actually become a first principle. Travis, really interesting for you guys as you go into making a public offering. Can you share your thoughts on, how ESG is working its way into your strategy and discussions with investors and analysts like Robert?
Yeah, seriously, I think Robert really summed it up very well, and I think I've got a decent amount of experience doing this, and our thesis really bends in right in interestingly in what he said there with respect to profitability and what we focus on. So our solution really targets water. Let's say it's there's multiple things that we're doing, but water is a specific one. Water is definitely a sustainability item and that type of thing. But what we've built around our business model is a really sound strategy and a very and with very solid economics. So what we're doing is we're playing into. Actually, Robert, I'm unbelievably happy to hear you say that because it kind of gives me a bit of validation on my madness. But I think we're vending our thesis right into exactly what Robert kind of underpinned that comment with. So. That we're really playing it exactly how I can't really say it any better than Robert did, so I'm not going to even try. But we're really playing in right to into the approach that he says is going to resonate with those in the investing community. And reality is, people want returns, and like Robert said, they're looking to value companies on growth rates and revenue, operating leverage, earnings, all sorts of things like that. And from an IPO perspective, we're vending right into that strategy where we're talking business, the strategy, et cetera, as well as ESG, trying to bring the theme under a really sound business model. That's really what our approach is.
That's great, Travis. Joseph, can someone who's been walked the walk, I guess, and has been through the public offering experience, what can you share on ESG and maybe lessons learned and how you report on ESG specifically as a company that is publicly traded?
Yeah, no, that's some great insights that's been communicated, especially from the lens of an investment audience and how they measure companies. I think traditionally ESG, and I know ESG and traditions don't come together, but traditionally it's been a lens of trying to tick a box that can also be understood by as big of a broad group as possible. I think the change in demographic and the social acceptance, and actually in some cases from a consumer point of view, expectation that I want to live in a brand new condo that is actually environmentally conscious. This is a building, it's no longer just a home. I'm a part of a community that needs to be environmentally conscious. And how do we introduce that? And because of our position as a property management technology company, where we have a direct relationship with every single homeowner, or in the case of a rental community, every single tenant, we actually have opportunities, and it's not gone missing on me, the responsibility that comes with that, to actually really help guide and direct that experience that someone living in their home can actually take in terms of steps to take towards a lower carbon footprint. So as a public company, I think of it from a just go do the work associated with making these communities a lot more efficient, a lot more and even on a social layer, because we can actually impact the harmony in a community. Like make a dent into these numbers. They're all measurable, and then as it works its way up the pyramid, you'll actually end up with a company that's really making a larger impact in hundreds of thousands of people's lives. I'm happy to unpack that in some examples later, but I'll leave people with this thought as Stacia helping build this incredible concrete or high rises, or Travis in his case, kind of really introducing massive risk mitigation to these communities. Just a thought for people to consider. You could drive in Europe and you can visit a village, and the village will be 500-600 homes, right? And that's a whole village, an ecosystem. Well, you walk downtown Toronto now, and there's a village after a village after a village after a village. Each one of those buildings, 500, 600, 700 homes. So the impact of these communities is massive. So if we all start thinking that way from a structure point of view, at the end of the day, it's a PropTech conference. You can really see the impact of technology like Eddie's or solutions like Eddie's that can make a big difference there, or even just being conscious of the concrete displacement or how you're doing it in a building. So just some basic examples.
Yeah, and water consumption for that matter as well, right? So, Stacia, I'm wondering from a technology provider standpoint, how has ESG helped you at Exact?
How has it helped us? I mean, I think the biggest thing is collecting data. We're collecting data all over construction sites, and it's contributing to the three pillars of ESG. I mean, what are we seeing on sites right now? We have cameras on site that can count the number of people in and out of the building. We have robots walking around measuring things or taking pictures that can help with lead credits. We're able to put formwork sensors to monitor the pressure when you're pouring concrete into a form. My company is obviously heavily focused on how the actual materials are performing on site and how those ambient conditions are affecting them as well. But by doing this all wirelessly, we're able to reduce the amount of labor needed for testing, and we can optimize processes. So that's helping with the social health and safety. But in some cases, we're able to optimize material usages. For example, obviously concrete is my focus, but if we can monitor the concrete on site and monitor the ambient conditions, we're able to make significant or major changes to concrete mixes by reducing cement to be able to prove out how it's actually performing on site. So we're doing this as a business. Data and digitization, it's not a new concept, but it is newer to the construction industry. We're trying to help our clients collect data, not just to have that data, but to build better buildings. I mean, I have a lot of conversations on site where I get responses of, no, I'm not interested. Technology means that I'm going to have to spend a lot more money. But realistically, we're obviously contributing from an ESG standpoint, but we're also saving these projects lots of money by accelerating schedule and by reducing the amount of labor that's needed. So I think it's a mentality shift that people need to realize that it ends up being a win-win at the end.
Has that, Stacia, maybe just a follow up to that, has that philosophy, would you say, at Exact become or translated into a competitive advantage for you? Like in a measurable way that you guys can see?
Definitely. I mean, we started the company based on my frustrations on site. I saw a lot of waste. I saw a lot of reactive processes, and I wanted to help these projects be proactive and not have to re-pour 1,000 cubic meters of concrete, for example. And it's just something that we've lived as a company, customer service, just being good to our clients and helping them build better. It's a moat mentality where we're sticking with these clients. We're building good relationships with them. So it definitely has an advantage over just people taking the buzzword of technology and bringing it to construction without actually understanding what it does on site.
Right. That's great. Thank you for that. So I want to dive into sustainability, the S in ESG, a little bit. And I think this is pretty exciting because this can get really overly theoretical. And I think this is an opportunity in the conversation to talk a little bit more practical on the practical side. Like, how do we operationalize or implement, institutionalize ESG? And so from an IoT standpoint, all these connected devices, I was reading some stats recently in 2010, just the average person, like people globally, 12.5 billion networked devices. The prediction is now by 2025, that number will change to 50 billion. So that creates a lot of opportunity around the area of sustainability. And I'd really like to hear all of your thoughts around that. Joseph, maybe you could get us started and just talk a bit more about that.
Yeah. So as a company that manages communities, we are the essentially the decision makers on the points of data that you referenced. And so think of a traditional what we call condo corporation, and it's kind of funny that it's called a corporation, which is actually relevant to the importance of ESG for this particular corporation where people live. And then there's literally thousands and tens of thousands of points of data that can really help us make better decision on behalf of the community. I know in our previous meeting to this panel, we kind of had pontificated on the fact that most people don't really even understand how consumption occurs in these communities. They could live in them in tens of years. And one of the things we discussed was I think it'd be great for Travis because of what his company does to even explain what happens if there is over exaggeration, or in the case of God forbid, a leak in a condo community. What happens? I bet you anything, most people don't really understand the complexity and the cost associated with that. So these IoT devices that can actually predict, or in some cases really help you jump on a problem before it becomes a much larger problem, incredibly expensive, go a long way, and we're seeing a lot more of that introduction. We do have a partnership with Addy Solutions, whereby we bring them into many of the relationships that we have with developers building brand new communities. But we still think there's a tremendous opportunity to retrofit these existing communities out there with some of these solutions and actually help them. It's good business because not only is it helping lower the overhead costs, but it's really preventing some serious risk.
So on that note, you kind of teed Travis up there, Joseph. That was nice. So Travis,
Thanks,
do you want to jump in here and
Sure.
kind of elaborate?
Yeah. So I made some notes there. I think it's interesting because listening to what Stacey was saying and then Joe, in regard to your question there, I think the key, kind of the theme underneath this is, ESG is ultimately a byproduct of return on investment. I mean, we all, are happy to, use less water or this, that, and the other. But the minute it costs a lot or it doesn't solve a major pain point, it becomes something that maybe the odd person will do it, but to make a real dent in this issue at scale, it's driven by return on investment. So what Stacey was saying there in regards to her clients and what they focus on, to me, that's brilliant because she's taken a scalpel-like approach to PropTech or IoT, and she's vended that into a massive pain point for customers where they can see value. So when I think about ESG, it's about returns and then being very, very strategic with your approach to what product to back, and then coming up with a very sound economic strategy to drive value. But with respect to what Joseph said there, so if we think about a leak, you could think about a leak in a building, it happens. And then you either shut the leak down or someone runs around all the building not having a clue where to go. This is without our solution in place, just as an example. And this is a reality. This is an absolute stress for property managers. There's a huge leak powered up at a gazillion PSI shooting out the roof over the balconies, and no one knows how to shut these things down. When you shut them down, the water turns off, let's say without having Eddy installed there. The amount of downstream impacts that absolutely it hurts sustainability and those types of things are everything from, X amount of more sheets of drywall being built out, that many more cars being driven around, those many more people in hotel rooms. I mean, there's so many downstream impacts to this. It really can't be looked at like I guess it's easy to coin sustainability or ESG against electricity or water or those things that are super visible. But to Joseph's point, I think that there's so many other pieces here that need to be thought about. And if we're thinking about this in the context of business and driving returns and making money, those types of things, if you get real crafty and creative with what you're doing with your solutions, you can really, really target both ESG and returns. So that again, that's just how we think about it. But there are so many levels of impact that you could solve for, and it really, to us, it's just a matter of creating a really solid mousetrap that's going to capture those situations that you're going to drive ROI, where ESG gets kind of dragged along with that.
Right. Well said, Travis. Stacia, do you have any additional thoughts to share on that?
Yeah. I mean, I can give an example. I know obviously Travis and Joseph, these are post-construction and pre-construction, but they're staying in the buildings for the life of the building. But there's also stuff that we're doing up front that might be embedded in the in the building, and maybe it just dies after a while, but there still is value to that during the construction process. So the project I was talking about before was the Eglinton LRT here in Toronto, a light rail transit project. Has lots.
You got to force them to get that done quick, Stacia. That's been going on way too long.
It's moving.
I live right there, and it's an absolute disaster. So.
Right. But this kind of brings up what's going on that people don't really know. Obviously, you see what's happening on the street. No one really has any idea what's going on below the road. But stuff that we've been doing there is obviously we're monitoring the concrete wirelessly. So we're reducing labor. We're helping the teams be proactive, as I mentioned. But what people don't know is that we were able to reduce the amount of cement in those mixes by 70% compared to a mix without supplementary material. And it needs to be talked about. I think a big thing is that we're not talking about using this data for the good. But it took about a year of collecting data and doing trials to prove out the durability of these mixes. But the main concern with the designers on the project was that if we put a recycled material into that concrete, what's it going to do to the strength gain? It's going to take a lot longer to gain strength. But by monitoring and putting sensors in the concrete, we were able to show that they're such large placements that they're generating heat, which helps with strength gain. So they were getting their strengths actually earlier than they thought they would with their typical mix. So we used an LCA lifecycle analysis tool to calculate the actual benefits of that. And just for the concrete that they poured on site to date, it's equal to taking 30,000 vehicles off the road for a year or planting 2 million trees. So there's a lot of benefits.
That's crazy.
Those are meaningful metrics, right? Because like that, translating that into layman's terms almost, right? Like this is what it equates to at the end of the day. So, and that really, thank you for taking us below the tip of the iceberg there, because I don't think the average person has that appreciation. And how would they? And even industry folks, right? So, Robert, how does this translate into something that's meaningful from the analyst investor community standpoint? And we've got ESG reporting being fueled by AI and IoT. Which do you think is playing a bigger role right now in the realm of ESG reporting?
Well, I guess I take this in a couple of different ways. I mean, on the sustainability question, I would say that we're always judging companies on the basis of their efficiency at the gross margin or the operating margin level, and so your ability to operate efficiently is important. And then there's a lot of really interesting companies that have come up on the software side that help orchestrate sustainability. I mean, right now we're really in the middle of a supply chain crunch. There's a lot of issues that companies have to consider around energy transition and net zero and all of these things. And there are going to be software tools that are going to help companies manage that. And there's lots of themes around that, like robotic process automation. There's like 5G network connectivity, AI, like you mentioned. And then if I take it from specifically the question you asked there around AI and IoT, I mean, I think of IoT as one of the fundamental pieces of environmental. If you think back into through my career, some of the earliest technology applied to this would have been remote monitoring of energy usage, the ability to collect energy readings on a house, build a thermal model of a house, optimize the energy usage, at a remote location. And so IoT, the sensors, they're the hardware that affects, that provides the data that allows software to sort of orchestrate all of that. And so IoT is it's the connectivity fabric. And so I think sometimes investors kind of lose sight of the value of the hardware side of this equation. A lot of focus right now is on, very growthy software, but I mean, a lot of the data comes from, connected devices. And we see, from an investor side, you're going to see that on the semiconductor side, which is a very, very, very active space right now.
Yeah, well said. I like that piece about just being the connectivity fabric. It's essential. It's foundational, fundamental to the whole piece and the whole value chain. I'm wondering, Robert, if we could just stay on you for a bit, since you seem to be on a roll there. So we'll just, I don't want to stop you. Can you talk a bit about the future? Like, how do you see ESG evolving based on what we're seeing today? Any crystal ball predictions?
Sure. I mean, from an investor point of view, like we see a lot of standardization starting to happen. IFRS standards, which are the standards of accounting we use here in Canada and internationally, a little bit different than US GAAP. But there's been some movement forward on trying to build a framework around standardized reporting. That's going to help investors judge companies against each other, and so I would expect that that's something that will, over the next several years, will become important. And then, there's a demographic factor here. I've been in the business for a while, but younger people that are coming into the business, they think about these things in a lot different way than I did. Because when I started, it was really all about the dollars and cents. It was about how much money am I going to make for every dollar of investment I make. Now, a younger demographic who's putting their money to work with an investment manager expects that investment manager to consider these factors. And so they don't want to see that investor is invested in, maybe an oil company or something like that. And so there's a demographic push. It's going to be on as younger people have more money to deploy in investments. That is absolutely going to be something that investment managers who are trying to grow their fund size are going to listen to. And so I think it's a rising tide of interest, and as we get more ways to compare companies against each other, and then I guess the other part of it is I think it's been proven that ESG companies are better run companies. Companies that do well on these dynamics tend to prove out to be well run, and by extension, well performing from a financial point of view. And so, that's coming back to that long tail risk I was talking about at the beginning. A lot of investors, a lot of companies rather, would like to see their money held by a long-term oriented, partner or investor who's going to hold you an investment in your company for years. And those companies are probably going to be more willing to invest in someone who ranks well in ESG.
Very true. And I think that's very well said, because I think companies that are more short-term oriented, it's almost in conflict with having an ESG mindset. So that's a great litmus test. I want to stick on this topic of future forward thoughts. We'll just go around the table. Travis, what are your thoughts on this?
This is a phenomenal question. This is such a phenomenal question. So my view on this is that the evolution of ESG is really, this is just my view, of course, but it's gonna run at the pace that returns can be driven through solutions. So the best example I can give you is and this is a shameless plug, but I'll give you the example of Eddie. So 3 years ago, we were just kind of getting going and trying to get this business kind of off the ground. As we start to bake out our solution, etc., imagine us having thousands of connected devices across a building that are now paid for or subsidized through insurance discounts and things like that. So basically looking at us, I'm just giving you one example of one item that in sustainability, so water being one. We now have the ability, because of the strategy that we've employed, we now have the ability to have customers, it's very, very affordable solution. There's subsidy created with it, and there's a really tight thesis around our pricing power and all these types of things that's affordable. You bring in subsidies, etc. I'm just layering all the components that kind of wipe out the spend, and really then is a massive catalyst to driving adoption in ESG as it relates to water. So if you think about water now, we're in thousands of units, millions of square feet of space where we're now monitoring, shutting down water, and completely revolutionizing the water sustainability component of ESG. And that is being driven purely by the basis that developers, constructors, insurance companies, property managers, asset managers, they can all rationalize the spend. Everybody wins. And now all of a sudden you have literally, I don't even know if this is a pun, but a tsunami of carriers coming to market saying, we need this in our buildings. We're mandating this. Water is the biggest claim. So they're feeling the issue on the claim side, cash outflow deterioration of shareholder value. And we come in as a group, collectively create a solution and a structure around our pricing approach, where now you get ESG, sustainability, shareholder returns, and all of these pieces. So using that as just a kind of very simple but myopic but large example due to the nature of water being an issue in the world, to me, if you think about the driver behind that, there's going to be literally probably billions of gallons of water saved starting right now, and it's already happening, and that's all driven ultimately through ROI. So I really believe, just to summarize, that the evolution of the space is going to be driven at the pace you can create solid returns for those that can justify spending the money to actually drive the results.
Awesome. That was really good, and I think that should resonate with anybody who's listening and paying attention to what's happening in the world. Joseph, you want to jump in here?
Absolutely. I think that's a really, really relevant example. ESG traditionally has been within the four walls of the organization. And I go back to the fact that organizations and companies that also can shed light and pave roads that are easy to follow for other groups of people, whether it's consumer audience, in our case, it's homeowners or tenants, will actually benefit from a really important point that I think Robert articulated beautifully. He spoke to it from a lens of younger people coming into the fund management and the investors, but also those people are also want to live in a way that feels right, that is sustainable. I do envision a place and a time where somebody's going to be contemplating buying a condo in a building, and one of the earliest things they're going to look at is consumption footprint for that building or condo. I also see them looking at harmony, which I know is a metric nobody talks about, but it actually comes from good governance. Good governance means a community or a corporation, a condo corporation, is well managed. And I think they'll want to live in a place where there's less fighting because we're all on the same side and aligned. And obviously the social component of that will really thrive. That's really why we started our own company. It was on a personal mission to turn Vancouver into a little bit of a warmer city. And I'm not referencing weather. I'm referencing the fact that it was notoriously known not to be a place where you don't get to know your neighbors. And we started from there. Before we know it, we're one of the biggest property management companies in the country trying to solve some of the logistical problems in that community. So I think if you take that long tail approach and recognize that it's this younger generation that's becoming a much, much bigger consumer of our products and services collectively here, one way or the other, are actually expecting that because that's a part of their DNA. I think companies that do that really well are going to benefit, and they'll be highly recommended by Robert and people like him in terms of where people should allocate their capital.
I love the social aspect there, Joseph. Thanks for bringing that in. Stacia, what do you say on this topic? And then we're going to jump into some advice. We'll go around the bend and then get into questions. But Stacia, I want to hear from you on this.
Yeah, I mean, I can only really agree with everything that the other guys said. The demographic changes, that's pushing things. Even though I just moved into a condo with crappy glass that I said I wouldn't move into, but I'm here. But I think it's just all evolving. And as I mentioned before, obviously schedule budget. I'm still hearing that on a day-to-day basis, but as more government incentives are going out there, like carbon taxing, it's just going to push things to change quicker. I see it on an exponential rate at this point.
Yeah, these are great predictions, guys, and I very insightful, and I think you guys are on point. Stacia, how's the concrete in your new condo? Did you get a sample of it?
Oh, you can't see because I have a background, but I have exposed concrete ceilings, of course.
Okay, all right.
You're a diehard. I love it.
Yeah. I'm sure that met your specifications before you moved in. So just to kind of close things off on the discussion pieces, because we do have some questions. We've got 3 questions in there. I'm going to try to get to them before we close off. We've got about 15 minutes left. I want to go around the bend, and you guys can decide what order you want to go in and talk about advice. So when you're thinking about startups and technology companies that are jumping in and starting out, what advice would you give them around ESG policy? And I'm going to play devil's advocate here a little bit and just throw this in here. Is it realistic for a startup company who is just trying to survive or raise seed money, has 6 months to live, is still worried about things like product market fit, POC, MVPs, to be thinking about ESG? So maybe put some thought into that. when you answer that question. So who wants to give this one a shot on advice?
I'll jump
for startups. Go ahead, Travis.
I'll fall on the sword. I actually think it's an incredibly interesting thing for startups, because I think when you think about even the world you're in, John, in InsurTech, right? The funds, the venture funds out there, the seed or like super, super early stage investors. I had a conversation with it wasn't ESG, but it was a conversation with a gentleman around. He came to me with, I look at venture investing myself and things like that, and he came to me with like a gazillion ideas. I like this connectivity. I've got a million. What can we do? What can we connect? And I'm like, pump the brakes. You got to like start with like one use case and really sharpen the sword on that one use case. But I think the high level, if I could give any advice, would be really, really refine exactly where you think you're going to be able to make a dent, where companies are going to provide, where it's going to be very valuable. You're solving a large pain point. But I think there's a lot of venture funds out there on the prop tech. There's tons, and there's billions and billions of dollars flooding into the space, especially in the US. Prop tech funds, InsurTech funds that all vend right into ESG. So, and they're out there and they're interested, and these guys are looking for 100x returns on early stage investments. But the advice would be essentially, if you're going to focus on ESG, make sure that it's in line with a very, very sound value proposition, one that you can actually price and make a really good return on to show that value. And then, as I said, there's a lot of opportunity to garner investment from a variety of firms that are actually looking for ideas, that are looking to incubate. Like there's funds out there right now that are set up in such a way that they want to only look at pre-seed, like super, super early seed investments, because they've got a team of people behind that, and their value proposition to the shareholder or to the founder in a lot of these cases is to bring that real professionalization to their company. So although for startups it might seem intimidating and a large mountain to climb, if you have a really, really tight thesis and you're in the right network with the right type of funds, you can get a lot of value out of that.
Great advice, Travis. 3 minutes for other thoughts, and then I'm going to throw out some audience questions. Anybody else want to chime in?
I'm happy to jump in. I am involved in a number of startups that are kind of in this space. I'll just make an echo, of course, what Travis had said about it's good business to be environmentally and sustainably and frankly socially conscious. I think a purpose goes a long way. You're speaking to a CEO of a company with 200 plus people now that had to compete salary-wise with people like Amazon and Microsoft having the red carpet rolled across the street literally from my head office and offering my engineers twice as much money as I can pay them. It's not a knock on them. It's just the reality of our lives. And the people that stick around are there because of the purpose. You want to be a part of something bigger. So a good startup that's really conscious and thinking about making an impact, not only within its four walls, but externally, has really, really good chance of not only retaining great talent, but also attracting great talent that wants something more than just a traditional job. So it's great business and great strategy to be very, very environmentally, socially conscious organization from day one, from first line of code that you're writing.
Fantastic. Thanks for that, Joseph. If you guys don't mind, I'm going to jump into the questions right now. Everybody good with that? We'll see what the audience has to say. So I thought we could get through the panel without talking about COVID, but here's a question. It is a good one, though. So can government-led initiatives such as COVID restrictions be considered ESG initiatives, or is that cheating? And who wants to take this one?
Ooh, that's a crafty question.
It is crafty.
It's actually, repeat the question one more time, John.
Can government-led initiatives such as COVID restrictions be considered ESG initiatives, or is that cheating?
So does that fall under the greenwashing?
Do they have to be original? Like, do they have to be your, or is it just like we're following? Because one is, you could say that's just compliance, right?
Well, one thing I'll say is that in the demographic topic that I highlighted before, I mean, younger investors, they're looking for authentic companies. And if you're inauthentic around these topics, it could be worse. And so I would tread carefully around greenwashing yourself, because if you get highlighted as a company doing that, I think it could be even, worse for you.
pigeonhole.
I love that. I love what Robert just said. It is so true. It is so true, and well said. I'd love to give a little bit of an insight just on the COVID-19 impact, because as you can imagine, we manage 800 plus communities in Canada, and these communities got affected obviously by COVID, and a lot of those people ended up staying at home a lot longer. So my comment to our staff as they're dealing with very frustrated, very scared, and very concerned people is to remind them that this is what's going on, and B, most people never stayed in their condos more than sleeping and maybe eating. Now people are living there 24 hours. What we're seeing from a trend point of view, which I think is relevant to this conversation, is a lot more employers are obviously allowing for remote work. And in our case, we were fortunate enough, because we're a digital company, we were able to do that pretty early March of 2020. But what we're also seeing is actually change in the demographic and where people are actually living. So what used to be a traditional secondary home, we're seeing people living in these secondary homes, working right through. So this is putting a little bit more emphasis and frankly, a little bit more weight on the infrastructure of a community. So it's no longer a place where I stay there for 12 hours and I live 12 hours externally in my job. I'm actually living in that building now for 24 hours. Hopefully not, but you understand the point. And now consumption is higher and interface is higher. Collisions, chances and friction is higher. God forbid, water leaks, opportunities are higher. So really, it's probably what we've seen is not only digital acceleration of more things being done online or apps, but we're also seeing a desire to actually pay attention to the consumption of the community more than it used to be.
Fantastic. Yeah, great thoughts there. So I'm going to dive into the last question here that we have time for, and it's about pivots. So can any of you point to a time where you had to pivot in your business as a result of ESG? Like you woke up in the middle of the night and you're like, holy crap, we don't have an ESG strategy. We need to pivot. I'm paraphrasing, by the way.
Yeah.
Has anyone had that moment where ESG became a burning priority for you?
I mean, that's why I started. So
I would say for me,
yeah, go ahead. You go ahead.
I was just going to say it has been a slow burn for me. I mean, this has been bleeding into my business over the last 10 years. I wouldn't say that we didn't see it coming. I wouldn't say that we didn't, see the growing importance of it. But I mean, a lot of the social factors around board formation, the elevation of, people of, visible minorities and gender diversity at senior levels of companies. I mean, these are all things that are becoming more important. And so we've seen that coming over a long term. And so I'd say it's been a slow sort of, the saying about the frog in the boiling water.
Right.
It's kind of creeping up on us and it's becoming a more and more important factor. I mean, Canaccord's listening to this and it's changing the way we do business for sure.
Yeah.
Fantastic. Stacia, why don't you jump in? Because I know you had some thoughts there.
Yeah. I mean, not as exact, we haven't really pivoted because we started the company based on my experience. So I completely pivoted my career, not from the construction industry, but to really focus on making things better and working with more clients than just with one contractor to be able to have more of an impact. So that was a big leap just from a personal perspective.
Great. Thank you very much, guys. Thanks for entertaining the questions. I'm afraid we've run out of time. It feels like we just got started. Thanks to all the panelists for sharing your thoughts and your perspectives on a topic that I think is still fairly new in people's consciousness. So hopefully we help people go a little bit deeper on that and peel back another layer of the onion. So I know I learned a lot from this session. So thanks everybody who submitted questions. And as far as the next session is concerned, please tune in for 2 p.m. And there's going to be another panel on a smart future, how developers are turning to intelligent designs. So don't miss that one. Thanks again to all of our panelists and those who submitted questions. That concludes this panel. Thanks, everybody.
Thanks, everybody.